Adam, happy Tuesday. Good morning. How are you doing?
I'm great. How are you? Thanks for having me, Ryan.
Yeah, I'm doing really good. Look, little secret here. You're in Montana, aren't you?
New York?
You're still okay. I thought you were the Montana trader. Don't you have a hat that has Montana on it?
I do not.
I'm gonna find it. I'm gonna find the screenshot and send it to you. I know I'm not crazy here.
I'm sorry. You know what? I'm sorry. You were right. The last time I was on, I had a hat that said the Yellowstone Club, which was in my yes. Okay, now I figured it.
Okay, so I'm not crazy.
You are not crazy.
I'm not crazy. Okay, sorry. Okay, good. I did wake up sick today, but I'm not crazy.
No,
okay.
Yeah, it's a Yellowstone hat. Great memory. And then you took the Yellowstone, put it to Montana, worked quickly, got it.
That's exactly what happened. Okay, awesome. So hey, look, last time I had David on here, I called him Darren. So I'm actually already ahead.
Yes.
We'll go ahead and dive right in. Look, one of the things that I've been doing with a lot of the T3 guys recently, I've been asking you guys about your morning routine. It started with Scott. I asked him about his morning routine. I was hoping to just get something about how he prepares charts and what he's looking for. And he launched into this whole thing about running and sauna and cold plunge. And it's extremely interesting to hear how everyone does this a little bit differently. So my first question to you is, what does your morning routine like? How do you get ready and how do you prepare for the market on a regular basis?
It's a great question. So typically I try to sit down around this time, like an hour before the market opens, give myself a head start. And what's really changed a lot is sector rotation happens on a daily basis now. So you could come in every morning and see what's in play, what's bubbling up, and then look for those sectors. And so that's typically what I'm trying to find as a momentum trader, because this isn't my investments. Like if I own Amazon for the next 5 years, you don't need a morning routine. You just own Amazon. But for active traders, momentum traders, option traders, you want what's in play. So it's the same thing as if you were a surfer going to the beach. You want to look at the waves. You want to see what kind of waves you're getting and how you're going to go out there. So, coming in today, you look at the market also, start with a top-down approach. Is the market up or down, right? Market's been very strong. We don't want to fight the tape here. And then I'm going to go through and look at my sector. So what I've been watching, I've been trading the nuclear stocks.
Awesome. Us too.
Yeah, I've been trading the quantum computing. Now, I want props. I don't know if you guys have a tape or anything. When I was on last time, like a couple months ago, I was like talking about quantum computing stocks, and I brought up IONQ when it was like $12, and then it went to 36, and I went over the other quantum computing stocks too. Now I said it was a 5-year play. I didn't realize it was a 1 month play or 2 month play. But so like today, I always come in with a little bit. I'm not coming in flat every day. So I'm going to start with my current positions and see, is it attack mode or defensive mode? Like today, I'm kind of flat, so it's neutral. But if I see I'm up in the morning, okay, that means I'm feeling good. My stocks are right. I'm going to dive right in. If I come in and I see I'm going to be down on the open, all right, now I might start to roll some options, collect some premium, put on some defensive trades. So it's kind of like how I'm coming in is going to affect a little bit what I'm doing. And then also, again, really just targeting what's in play. I go through a bunch of different places to look for what stocks are popping. I have my own lists of stuff. I have my watch list. Like, so right now I have my mesh list. So like I look right now, the Qs are pretty much, no movement overnight. I'm watching the SMI. So the market overall is very flat.
Yep.
So what sectors are in play? Yesterday when we left off, again, I was trading those quantum stocks. Today is kind of a flat open, so I'm going to open, kind of just watching what I'm doing. I'm nothing aggressive right now. My favorite open, the time I get the most excited is for an extreme down open. Those are the best days to wake up early, start finding what's in play where you're going to catch some really good waves. I'm always looking for that. It doesn't happen a lot often anymore. It's more managed, so you have to wait from. But like on a day like this lately, it's just come in and manage.
Okay, so there's a ton of good stuff there. First of all, I'm thrilled that you said that your favorite day is when we have a down open, because low key, mine too. It's actually a lot easier, in my opinion, to spot relative strength on a day where the market is getting pounded in the pre-market. Then everything opens up and you can really quickly kind of find some of those really good plays. So awesome stuff there. I do have a quick question. And by the way, we are live with Adam Mesh. Be sure to get all of his top option strategies in one simple training. Scan the QR code or click the link in the chat. Adam, you said something here with IONQ. You had a 5-year time horizon and it went to your target price in 5 weeks or whatever it was. Let me ask you, just as kind of a trader, how do you approach that trade setup? Of course, you're happy that the stock did what you hoped it did and did it faster than you hoped. Do you take all of your gains? Do you take partial gains? Do you sit there looking to reload? Do you kind of recharge? How do you deal with that when the time horizon is just so far advanced from what your initial plan was?
Amazing question. And I also just want to say on IONQ, from what I've been told, and this is more of a fundamental thing, that quantum computing could be the next kind of NVIDIA type play. Mm-hmm. So it's not at my 5-year target, but I wasn't expecting these stocks to be in play as soon as they were. And yes, it went way through where I thought it would be now. And so it's different for different settings. So let's say there's like an upgrade in price target. So if you're in a $10 stock and they upgrade it to 15 and it's trading at 13.50, I'm not waiting for it to go to 15. I'm done. That play's over for me. Like, it got close enough, you know? A great example is Palantir. Palantir is a stock in my group. We were in it at $10. Sorry, not Palantir. Sorry. Oh my God. SoFi. Palantir did blow through my targets to the point where I stopped trading it. But SoFi is what I'm talking about. But Palantir is an extreme example of something blowing. We were trading Palantir in the 20s, 30s, and 40s, and now we're like too much too fast. SoFi, we were recently in at $10. We put on a big trade at $10 and our target was 14. Now it's at 16. So that trade's over for us. What we might do to reestablish is sell puts underneath. I think I sold recently a 13 put for December 20th, just to maybe collect some premium or get back in if it comes back down. Mm-hmm. But if I'm really bullish a stock, I'm going to put on a 90-day or 120-day call. Okay, like Wendy's I own calls into next year. Avis I own calls into December, January, I think February. I'm gonna put on long-term calls. SoFi, I did that too. And then I'll sell premium against them if they start to struggle at all. If they go up and they hit where I was expected to go, like SoFi was that 14, 15 area, now what I'm gonna do is I'm not gonna buy calls anymore. I'm gonna sell puts underneath. Okay. Which works until you get to a Palantir where you bought the calls, it went up, now you sell puts underneath and it goes up so fast, you don't know where to sell the puts underneath, you're not buying calls anymore, you kind of just need to leave it alone. It was that major earnings play, power through. So sometimes I'll just let it go if there's nothing to do right now and just be like, I missed that, I can't chase it anymore up here. You got to be disciplined like that. But it is a really good question. It's a good problem to have.
Yes, sir. That's where I was going.
But the key is not to be greedy. So I think with options, it's really nice because you could roll your options. You could switch from owning calls to selling puts. And what's the difference? If you own a call, your upside's unlimited. So, if you're really bullish a stock, you want to own a call to start because you want to capture that upside. If you feel like you've gone too far too fast and you want to stay involved, okay, now you could put on a bull put credit spread underneath. If it holds or goes up more, you're going to make money. If it comes back down, you're still buying in at a discount because of the way you put on the trade. So in SoFi now, I sold those puts. In IONQ, I started. So IONQ, so I got involved at $9.50 with IONQ. Okay. Now, like through buying and selling, whatever, it says my cost basis is $11.95. But for some of that, I sold 15 calls. And I kept rolling them back. Like I've rolled the 15 call back to January 2026 right now, just to collect more premium. I'm kind of just stuck in that trade. And I know I'm making money unless it comes down 17 points. But now what I've done is I sold the 20 puts And then when it kept going up, I sold the 26 puts. So I've laddered my puts and continued to collect premium all the way, but I'm no longer buying it up here. The stock tripled in a month.
Yeah.
Now my puts are underneath, and I'm looking good in that. Same thing with some of the cheaper ones in that play too. Even like Qubits, which is started at $1, went to 370. I was in at 90 cents, right? And then at 370, I wasn't buying more 370. I took off some of my bullish play and I started selling the 3 puts, the 250 puts. They come back down. So even though it's below 3 now, I'm fine because I sold the 3 puts in Qubits for 85 cents. Think about that. I sold when these stocks are boiling, I collected 85 cents premium on a $3 stock.
Yeah,
that's crazy.
That is crazy. They're normally not that expensive. That's wild.
So I have fun with it, but that's my MO. It's a great. I think listen. That's the problem you want to have. We all want to have that problem as traders. We want to go up too much too fast, and then we want to manage it. And the key is just not to be greedy.
Yeah. And so I love that about the key there, not being greedy. I think the big takeaway from me there was that you were still active. So you get this move here. It's not as if you just kind of closed your trade and said, okay, well, I'm done, on to the next one. No, you were still active in the same name. The Palantir example, this was actually a really good example, at least for our group, because Palantir, I don't know that there was a single stock that made our group more money over the last couple of months than Palantir. We have been trading this since the high 20s, very much like you. We had a great butterfly trade on here where the body was at 45. So as soon as this thing went to 45, a lot of us were cashing out there multiple 100%. And then it went another 20 points from that. And so that secondary 20 points, I actually missed that because I was out. I thought about it in hindsight. I said, you know what I should have done? I should have used some of the profits from the butterfly and rolled that into some more upside calls. So, okay, really, really good stuff there with the strategy. Can you tell me anything else about your strategy that maybe you didn't cover yet?
Yeah, absolutely.
Okay.
And I want to say, when you've been doing it, I've been doing it since 1997. So, and unfortunately, I have the memory of an elephant. So I remember owning 10,000 shares of Netflix at a true $11 price. I own 20,000 shares of Apple at 20-something dollars. I've seen so many things go up that, like, if I would have just held everything since the beginning, oh my God. But as a momentum trader, you learn to shrug it off, because for every one of those, I remember Tilray going to like 300 and thinking, oh my God, I was in that. And then it came all the way back down to $1. So it's like, you remember both sides, and the key is just to not be greedy. But here's something that I think is really important. Okay. And I think this is a really good message that I could hit on for your audience, Ryan. Let's talk about the stocks that don't go right away. Let's talk about the positions where you get in and they're holding and they're keeping you in them. They haven't exploded up. They haven't shaken you out down. You're kind of just riding it, right? If you're in those positions and as an active trader, you have to maintain the edge over everybody else on something that you're in when it starts to go. So if you're sitting in a stock that's kind of been dormant, and for whatever reason you've been in it, and all of a sudden you see a swell up in a volume, the volume's trading more than it has, the price action looks different, you recognize, because you've been in it, something's happening. That's your edge. You put in the time, you've been holding this position. That's where I'd like to see people buy more aggressively and capture that move, because you have the head start of having watched it. And I think that's an important thing. You don't really just want to sit there with stocks and then like a Palantir, let's say you were in it in the 20s and it was battling 20, 30. And all of a sudden it gets above 30 and oh, this is the first time it's above 30. Well, now it hasn't made an extreme move yet, but it's starting to go. If you lay in at 30, you're going to get greatly rewarded. Same thing with Uber when it was in the 30s and 40s, and then it started to break out on the upside. If you were in Uber early, hanging around when it was stuck in that 10-point range for years, when it breaks out and makes a move to 80, you got to be involved. So whether it's Hood, which was in the teens and went to 30, SoFi, which was a single-digit stock that's now 16, Palantir, whatever it is, whichever ones you're in, if you've been in them and they start to go, you got to make it count. And I think that's really important. And there is where the word positive drift comes in. It's going to be a quick decision that you have to make, because if you wait a couple of days, you're like, oh my God, now it's gone. So it's a good problem to have when we go through our targets. But I think the solution for that is, if you get in and you've been in, noticing the changes. Like, people shouldn't have so many positions on that they can't notice when one of their stocks is starting to bubble. I have 30 positions on now, but I know them. Like I know them. And if one of them starts to do something different, up or down, I'm going to recognize it. I'm going to be in on the options, and that's going to be my big day. That's going to be my trading day. So when you go back to the very first question, which is preparation, it's, of the stocks that I watch, which ones are doing something unusual, and how can I take advantage of that?
Okay, that is really, really good stuff there, folks. I hope you were paying attention to that. We're going to clip that because that's really awesome. You just mentioned something unusual there. My last question here for you. Are you into unusual option activity at all? Do you let that help your trade at all? Do you use that as a data point for taking a new trade?
No.
Okay.
I have someone I work with who does. Tim Bigham is fantastic. He'll sell the deltas unusual on options. He has a fantastic strategy. So if, let's say, like, there's an unusual options activity in, what month are we in? December. Let's say there's unusual options activity in the January calls of whatever stock. Instead of buying that activity, he'll sell the January and then buy the February and March and look for a reversion to the mean on the delta. Because when there's unusual activity, it's only in 1 month. So it's kind of like playing the do not pass line. It's a great strategy. It's different than what everyone else does. So he does that. I love that. I'm of the Tom Sosnoff school. He's trained me for the last 5 years. I have him on every month. Love him. And he says, don't pay attention to that stuff. So what I look for is a volume activity. If I want the average volume, if the average volume on a stock is 1 million and it's doing 5 million on no news, that's going to catch my attention. Why is there so much being traded on no news? So the volume of the stock captures my attention, not the options activity. But yeah.
Okay. Real good stuff there, folks. Get all of Adam's top option strategies in one simple training and learn how he finds trades looking to print money every week. Adam, thanks so much. This was amazing. Glad we got to the bottom of that whole Montana thing.
Yes.
Because I swear, I was like, oh my God, I can't believe I screwed this up. Adam, thanks so much. For all of you out there that want Adam's free content, go ahead and scan that QR code. I did throw the link in the chat. Adam, have a great rest of your week, all right?
Thanks, Ryan. Yeah, we're interviewing Tom Sosnoff today. So when they click that link, they could come on this afternoon and join me on that interview, which will be great.
Check it. Tom is a hoot every time. Definitely check that out. Real good stuff here, Adam. Have a great rest of your day.